Hi guys, how are we doing? Okay, it is our first meeting after New Year. So guys, I want to tell you Happy New Year once again. For some people, I managed to tell it earlier. For other people, I presume you already set your intentions for 2021, prepared yourself, and now ready to achieve all your dreams, okay, in 2021. Some of us, we went for Wealth Mastery Bootcamp a couple of weeks ago. I presume people who are here probably went there can share how they liked it. So anyway, guys, tonight master class we're going to run about very kind of big company in software industry, and we've never actually covered software industry itself and computer software industry, but we've done couple related industries. And I presume you understand, same as when we analyze different industry, very often the companies within one industry, they actually interlink with different industries. So it's very difficult sometimes to tell where that industry actually can be placed fully, all right? And just a second, yes, we're recording. Yeah, bootcamp was amazing. Okay, fantastic. All right, guys, it seems like everyone is here. Nobody's joining anymore. And let's share the slide. So basically, before I start, I just want to read the disclaimer, or you just read it yourself. And I want you just to understand, guys, that it is an educational webinar, and it's not a recommendation. I don't have legal rights to advise you what to buy, what to sell. But this masterclass is showing you how majority of value investors and investors like professional investors, they think when they analyze the companies before they allocate any capital in it. Okay, of course, the process of itself, it takes a bit longer than just the time we're going to spend on the masterclass. But at least by being here, you will understand how people think before they allocate money into any company. All right, and of course, if you like this particular company, I definitely would recommend you to research it further. And then if you decide to put any money in it, you have to do it in a kind of in reliance with your own portfolio rules. Okay, so never put all your money in one basket. Remember that rule and try to keep it. Okay, now the way we usually run our master classes for those people who are new, we usually go through like industry, like general market overview, to see just what is happening right now on the market. Secondly, we're going to the industry itself, and we look what is happening with this industry. And also we try to understand what is important when we invest in that particular industry. What kind of things we have to keep in mind before we put money in any company in that particular industry. And then in a later stage, we're going to look at specific company which called VMware. And I presume a lot of people already know this company. And I want to say straight away, thank you, Max Vlasov, because he helped me to understand this company better. And probably some of you already know that company, especially those guys who work in that specific industry. Okay, more people joining. And then already in the end of it, I'm going to tell you a couple news which we have in our academy and announce certain events which we're going to have in the future. All right, guys. So if you have any questions, you can always ask in the chat. I always can give you some, the microphone, I switched it off right now because otherwise it's going to be very, very loud. It could be background, but if you want to say something, just let me know and I will give you the voice. Okay. Now let's start from Dow Jones. Dow Jones, for those who don't know, it is an index. And this index represents 30 biggest companies by its capitalization. Okay, and of course, if you see that index is growing, it means that prices for those specific companies, they're growing as well. Okay, basically it is like that. And you need to understand why the index is growing, and we're going to just talk about it a few minutes as well. But the main important thing that the price is the value is there are different parameters, and value includes in itself assets which represent those companies, but also the profit which they're making. Okay, it's very difficult to distinguish what kind of assets within that index, because the companies, they are not included in equal proportions. They have different ratios there, and but we know how much index, like at least paying in dividends or making money, and it's easier to kind of evaluate it comparing in index prices in different times. Okay, now what we can see, if we look technically, what just the price representation on the screen, we can see that the index is pretty high. And for those who know technical analysis, you understand that at the moment we are just under the resistance level, and the price of Dow Jones Index is practically the highest in history ever. Okay, we had the highest point just before the pandemic started and before this collapse. And during this collapse, some companies and some indexes went nearly 37% down. All right, at the moment we climbed all the way up and even higher. All right, and as you can see, we're somewhere here. Usually the rule is whatever goes up, then it goes down. Now, for how much it's going to go down, but still we can expect that. And basically looking at Dow Jones, personally, what I believe, it like this is the hourly chart. We can see that it's going uptrend, and now this is just at the top of that, under the resistance level. Okay, and we can see this was a slide down on Friday. Last night market was closed, like yesterday American market was closed, and what we can see, definitely it can go down here to around 30,250, but then it's pretty easily can break through this level and go to 29,460 and even lower. All right, I wouldn't be surprised if we go back to the range where it's about 26,000. It would be quite a big fall, because if you just try to calculate percentage, 30,800 and 26,000, so it's about 4,800, so which is about what, roughly like 13-14%, right? So drop. It's quite a big drop if you look at the previous history, how companies like how indexes can fall. We cannot compare with that fall. It is very, very unprecedented fall, and then recovery is very quickly. I, to be honest, didn't expect that we are going to recover so quickly. Now, this is a Dow Jones. If we go for Standard & Poor, looks very similar. Also, the index fell in March, and then it's recovered pretty quickly. Then it was kind of sideways movement, and then in the beginning of November, it's kind of broke through and start moving up. Okay, higher. And again, so easily we can return back. I wouldn't be surprised if we return back to this kind of narrow trend, okay, sideways trend. I wouldn't be surprised if we see that. And again, so if it falls from 3,760, it's SPX, okay, so to 3,200, it means that about 560 points drop on 3,700 price level. So it's more than, again, 10%, so it's about 13% again. So similar to Dow Jones. And again, in both indexes, we can see that indicators, they are in overbought situation, and we can see they're already turning. So it's kind of telling us that people start selling like this index. Okay, in this particular, you cannot sell the index itself, but derivatives related to this index, that's what they do. Now, this is on the hourly trend. That's what we can see. Very, very similar to Dow Jones. Now, if we look at Nasdaq, actually it's a bit different from previous two indexes. And look what happened here. This is the point where we were in March, before the pandemic was kind of announced to the world and lockdown started. So we can see that the price fell quite a lot, from nearly 10,000 here to 7,000. So actually Nasdaq fell quite a lot, but then what happened, it's recovered much more than previous two indexes. And if we look at the lowest point, which is about 7,000, and now it's nearly 13,000, it tells us that the index from that lower point moved nearly what, 90% up. So can you imagine if you put money here, so within that not very clear market, you could make up to 80-90%, which is absolutely incredible, right? And again, we can see uptrend, and again we can see that it's just somewhere under the resistance level. So if it drops down, I wouldn't be surprised if it goes to around 11,500, somewhere here. Again, it would be 1,300 drop, which is roughly 10%. So definitely. Now you have to understand that indexes, they represent companies which are behind. If Dow Jones, biggest companies by capitalization, Standard & Poor index, that's why it's called S&P 500. So they include 500 companies which are small, medium, and large sizes. So personally, I believe they better represent the whole economy. Okay, whereas Nasdaq includes 100 tech stock, majority of tech stock included in here, technology stocks, and probably the main reason why this specific index moved so much up, very simple, because during this pandemic time, technological companies, they actually benefited out of it. A lot of other businesses, other industries, they suffered quite a lot. Some of them actually nearly on the level of extinctions, right? But like cruise liners, for example, they really cannot start operating now, and all these huge ships, they're standing there, and we even don't know when they're going to start running all these cruise trips again. And if companies, they won't have enough money to sustain themselves during that period of time, probably they will go into liquidation. And it's very difficult will be to sell those ships. Okay, so probably majority of investors in those industries, they're going to lose their money. All right, whereas IT stocks, they actually increased a lot. So that's why we're looking at this particular industry, even though the company, I'm going to straight away to tell you, it's not the cheapest in a sense of valuation, but still compared to the companies which included in that particular index, it's one of the, on the best level. Okay, let's have a look what happens with one more index, which called volatility index, or VIX, and some people call it index of fear. When you see it so high, it means the fear is high, and when the fear is high, it means what happens in the market. Like if everyone is afraid, majority of our companies, they fall in price. And that's why when you look at the volatility index, if it is low, it means all other indexes are high. And if this specific index is high, it means other indexes are low. So they work in opposite direction. And as we can see, it bounced from the bottom around maybe 21 level, and not now for the last couple trading sessions, it's actually moving up. So it tells us that fear is increasing, and we can see at the same time other indexes prices start to going down at the same time. Okay, so why we're usually covering that particular part in our masterclass, because if you're an investor or trader, doesn't really matter, and if you're putting money in the stock market, you have to be aware of this situation, because if you're trying to open long positions, you're kind of now not in the best time, because if you open the long position and then a week later, or month, or maybe a couple of months later, the index falls like 15–20%, it will drag your companies as well. And it means that if you allocated $100,000, for example, in your portfolio, it wouldn't be nice if you 2 months later found yourself with a $20,000 capital loss. It wouldn't be realized loss. And some long-term investors might say, it's not that big a deal because I know it's going to recover. Yes, if you invested in a good company, it's going to recover. But at the same time, guys, it's much better to buy in the right time. And then it's better to sit in the cash, like a lot of savvy investors do. They keep the cash for situation like that. When the price drops, they buy a lot. Okay, that's what they do. So you always buy in discount, and you stay away from the market when it's overpriced. Whereas newbie investors, the people who just join the stock market, what they do, they're actually trying to catch kind of, we call it a Trump, right? Running away Trump. So what they do, they see the price moving up and up and up and up, and they say, oh my goodness, I'm too late, but I have to jump on it because it might move even further. And they buy it, and sure enough, the stock price start moving to different directions. So please be aware of that. And especially if you have already, if you're already investing in the stock market and you have nice profit, and you understand that your company is already quite pricey, so maybe it is a time to fix profit, or at least try to collect rent at those levels, because we might stuck there, or even if it pulls down, at least you have some income. Okay, so you're selling covered calls or doing some option strategies. If you know how to protect it through put options, it would be fantastic as well. All right, so guys, can you please put from 0 to 10 how you understand this part of the masterclass, and then we'll continue to the already our industry. Okay, great, fantastic. If you have any questions regarding this topic, please ask. Okay, great. So, oh, by the way, one more thing which is also very important to understand, because what we've done now, we looked at technical analysis, right? So, but we have to understand that the prices which we see, they're a reflection of what happens within an industry. And a lot of people trying to understand if generally the price of index growing, it means that businesses within, like companies which included in that index, they're also growing, correct? Now, and for us, it's also important to kind of to get, and what's the valuation of this index at the moment? Because personally, I believe that index is quite overvalued right now. And the main reason, if we go to financial data, and if we take only one parameter for that, we already can see it quite a lot. Look, for example, this is P ratio, price earning ratio. For those who know it, it's fantastic. For those who don't know, basically price earning ratio shows us how much money people are paying for $1 profit. Okay, so if the company is making $1 profit right now, how much they're paying for this dollar? And I presume you understand, if you're paying less, it is better, right? Because $1 profit you can buy for $10 or for $5. And but on our markets, it's a very different situation. And look, right now, not right now, last Friday, I took this screenshot because market was closed last night. So see what happened. Dow Jones, okay, if you buy Dow Jones, so you would be paying 30 times, $30.58 for $1 of profit of Dow Jones. Now, if you compare last Friday and the year ago, so you would be paying for the same dollar of profit only 21 times. Now, why it is important? Because if we see that the price of index right now is higher than last year, the question is the companies, other companies included in this index making more money or not? So, and basically based on that, it doesn't look this way. And that's why it's kind of creates a curiosity, and what the heck is going on in the economy? Why we have this kind of unprecedented, unknown future? Because a lot of people, they still don't know what is going to happen with their businesses, with their jobs and everything. But at the same time, right, the prices are going up. And the answer is very simple, because a lot of countries, they practically throw money into the businesses and to employees. They support themselves because they don't want 2008 kind of happen again. So they're trying to prevent this huge fall. But you have to understand that even like last year, Australian economy showed that the amount of bankruptcies which happened within last year was much less than if it wasn't a pandemic. And the main reason, because government saved companies which they weren't supposed to save. But what happened when the government take off this support? Because at the moment there is support still there, but if in a few months' time, government will tell, okay, that's enough, now guys, you're on your own. So what happens with a lot of businesses? A lot of businesses are going to collapse. A lot of businesses are going to fail, because many businesses right now, they're suffering. And the only reason why they're surviving, because government supporting them. Okay, this is kind of the thing. So the question is, what is going to happen with the valuation of index at that particular moment? I presume, personally, I believe that is going to fall, and fall very rapidly. Okay, you have to be aware of that. And that's why when you're investing in any particular company, you have to check this company 10 times. And also you have to be aware that this company is crisis resistance. there are different businesses, and some businesses, they perform actually much better during the economic crisis. And if you understand how to identify those businesses, you're great. If you don't know, you have to come to us, to our program. We are running the program in the beginning of February. We'll start 3 months program. So do join us and learn how to analyze those stocks. Okay. Now, if we look at NASDAQ and we look at other two indexes, the S&P, we can see that the situation is very, very similar. And we can see that we have $39, nearly $40 for $1 profit in NASDAQ, and $40.98 we pay for $1 profit in the S&P 500. Whereas last year it was 28 and 26 times relatively. Okay. Now, if we look at July time, so I've done it. I just showed you last year, but at that time last year the market was quite overvalued. And look at, if we went 6 months even earlier in July, that's what we see. Instead of 30, we can see 18. So, and at the moment it's close to 40, right? So can you imagine how much people paying more now for $1 of profit? It's not normal. It's like, can you imagine pre-Christmas rush? And people putting a lot of money into this particular shares. Of course, a lot of economists and a lot of analysts, they're saying that it's not only government support which triggers this type of investment, but also negative interest rates. And a lot of people, they don't want to keep money in the bank, because now it's not only not unprofitable, but actually in a lot of countries you have to pay for keeping your money in a bank. So that's why they're moving money to the stock market, where they at least can get 2 to 3 to 5% dividends, depends on the stock, and they know that's what they need. It's kind of preserving money. And of course, when a lot of people moving money into the one area like stock market, of course it affects the stock price as well. So some people believe in that. The program, it will be of course chargeable, yes, because it's 3 months program. Nobody is going to provide the 3 months time for nothing. I presume you understand that. You are not going to work for 3 months for doing nothing. But we're not talking about the program today. So if you want to learn about this program, we're going to run the event specially related to that later on. Okay. Now, guys, this is all about the index. So let's move to computer software industry.